Hi everyone, welcome back to Tax Engineer. I'm Balaji Natarajan, enrolled agent, and my goal here is to make taxes simple and easy to understand. No complicated IRS language, no confused tax terms, just practical information that can help you make better tax decisions. Today, we are going to talk about one of the most common questions people have when they are filing their tax returns. Should I take the standard deduction or should I itemize my deductions? This is a question that comes up every single tax season. Some people wonder if they are missing out on deductions because they don't know about itemizing. Others spend hours collecting receipts, adding up expenses, and organizing paperwork only to find out that the standard deduction would have saved them more money anyway. So, today, let's break this down in a simple way. When you are filing your tax return, the IRS does not tax your entire income. Instead, you get certain deductions that reduce your taxable income. Think about it this way. Let's say you earn $100,000 during the year. The IRS doesn't simply take that full $100,000 and calculate your tax. You first get to subtract certain amounts. One of those deductions is called standard deduction, or if you qualify, you can choose to itemize your deductions. After subtracting your deduction, the remaining amount is your taxable income, and your tax is calculated based on the taxable income. So, what exactly is standard deduction? The standard deduction is a fixed amount that the IRS gives you automatically. You don't have to prove anything, you don't need receipts, you don't need to track individual expenses. You simply qualify based on your filing status and you get the deduction. For 2026, the standard deduction amounts are: for single filers, it's $16,100. For married couples filing jointly, it's $32,200. And for head of household filers, it's $24,150. If you are age 65 or older or legally blind, you may qualify for an additional standard deduction amount. Now, because the standard deduction is so generous, most taxpayers simply take it. In fact, around 90% of the taxpayers use the standard deduction instead of itemizing, and that makes sense. For many people, especially renters or homeowners with small expenses, the standard deduction usually the better option. You don't have to spend time tracking the expenses, you don't have to keep hundreds of receipts. You just claim the deduction and move forward. Now, let's talk about the other option, itemizing. Itemizing means you don't take the standard deduction. Instead, you add up specific expenses that the IRS allows. Some common itemized deductions include mortgage interest if you own a home, state and local taxes, which include property taxes and state income taxes, charitable donations to qualified organizations, certain medical expenses, and some casualty losses related to federally declared disasters. You add all these expenses together. If your total itemized deductions are higher than your standard deduction, then itemizing may save you more money. Let's look at a simple example. Imagine Sarah is single and owns a home. During the year, she paid $9,000 in mortgage interest, $8,000 in property taxes and state taxes, and she donated $2,000 to charity. When we add all those together, her itemized deductions total $19,000. Now, compare that with the standard deduction for single filers. It's $16,100. Since $19,000 is higher than $16,100, Sarah would benefit from itemizing. She gets about $2,900 more in deduction compared to taking the standard deduction. Now, let's change the situation. Imagine Sarah is renting an apartment instead of owning a home. Maybe she donated $2,000 to charity during the year. That's great, but her total itemized deductions are only $2,000 compared to the $16,100 standard deduction. It doesn't make sense to itemize. The standard deduction gives her much more benefit. So, the decision is actually very simple. You add up all your possible itemized deduction. If the total is higher than your standard deductions, then itemize. If your total is lower, then take the standard deduction. That's the entire calculation. Now, there is one change that could make itemizing more attractive for some taxpayers in 2026, and that is the SALT deduction. SALT stands for state and local taxes. This includes things like state income taxes and property taxes. In previous years, the SALT deduction was limited to $10,000. That limit affected many homeowners, especially those living in states with higher property taxes or state income taxes. For 2026, the limit has increased to about $40,400. This means some homeowners who previously didn't benefit from itemizing may now want to check their numbers again. If you have a high mortgage, high property taxes, and state taxes, itemizing may become more beneficial. But remember, just because you have a house doesn't automatically mean you should itemize. A lot of people think, I own a home, so I must itemize. that is not always true. You still need to compare your total itemized deductions against the standard deduction. For some homeowners, the standard deduction is still the better choice. Here's a simple checklist you can use before filing your tax return. Ask yourself, do I own a home? How much mortgage interest did I pay? How much property tax and state tax did I pay? Did I make significant charitable donations? Did I have a large medical expense? If these numbers add up more money than your standard deduction, itemize may be worth considering. If not, the standard deduction is probably the right choice. So let's summarize everything. The standard deduction is simple, automatic, and works best for most taxpayers. Itemizing takes more work, but it can provide a larger deduction if you have enough qualifying expenses. The winner is whichever gives you the better deduction. There is no advantage to itemizing just because it sounds more complicated or because you own a home. The only thing that matters is the numbers. I hope this video helped you understand the difference between the standard deduction and itemizing. If you found this useful, please subscribe to Tax Engineer. I create videos explaining taxes, personal finance, and business topics in simple language so you can make better financial decisions. Thanks for watching. I am Balaji Natarajan and this is Tax Engineer. I'll see you in the next one. Bye.